That's up to all of the shareholders individually to determine where they think their interests lie. Given that there's a 75% threshold for a special resolution, I think it's a very high hurdle. So my personal expectation, I don't. It's not my job to speculate on the probability of the outcome. As an equity research analyst, I'm looking at the value of the company and looking at strategy, but not specifically on kind of these situations. But my personal expectation is probably the resolutions won't pass this time. But I think they're reflecting a longer term issue that's not likely to go away for HSBC. So in that sense, I think we will continue to see activists or leading shareholders applying this sort of pressure on management going forward. But probably this time, I personally expect that probably the resolutions won't pass. I mean, if we split up the two resolutions, 17 and 18, resolution 18. Asking basically binding management to commit to maintaining the pre-pandemic dividends. I guess we could say the one thing is that actually they're already HSBC is now already back to where they were, or even potentially above it is before 2019. For 5 years or so, they had always paid quarterly dividends, usually 10 cents a share, and then a year-end dividend, and it was 51 cents, pretty much each year. And during the pandemic, the total amount went down from 51 cents, but also it wasn't reliably coming every quarter. It was, in 2020, it was suspended until the year end, and then we just had interim dividends. And so now the management has gotten back to paying the 10 cent quarterly dividend, and also I think given where the earnings are likely to be this year. I mean, certainly the first quarter was kind of a huge blowout. Not that level of maintained, but just looking at where interest rates are and kind of the earnings outlook and what HSBC is guiding for their payout ratios. Not only will they be back to the pre-pandemic levels, but they should be above it, and of course we'll have buybacks on top of it. So in that sense, I guess the dividends is, shareholders could see that it's already been met. It's just a question of whether it makes sense to bind the management that regardless of what happens in the future, if there's another pandemic or whatever, that the management must always in every situation do this. And I think that's where the dividend resolution, I mean, probably the dividends is one of the reasons why there was anger against the management and during the pandemic. There are a lot of shareholders that were relying upon the dividend stream, or at least expecting it, and they felt maybe betrayed that the dividend was suspended. But that's maybe where it's coming from. But I think the fundamental issue here is that one of the reasons why the dividend was suspended, or at least partially halted during the pandemic was, HSBC it's a Hong Kong bank, but it is also a UK or European bank, and most of the European regulators, not just Europe, I mean other Asian jurisdictions, but you had regulators in Europe or regulators in the UK pressuring bank managements not to pay dividends, and I think that's what where the pressure comes from is that that some of the Hong Kong-based investors look at it and say, is it good that the UK regulators have this much influence over HSBC, which we consider to be a Hong Kong bank?